Over the past few days, markets have done something quite unusual. They have reacted to the same story in completely different ways. Oil surged above $100 and then pulled back. Stocks dropped, then rebounded, and Bitcoin fell sharply, only to climb almost straight back up. Not because anything has been resolved, but because nothing has. Following the collapse of the US-Iran negotiations and the announcement of the naval blockade of the Strait of Hormuz, markets initially reacted exactly as you would have expected. Oil spiked above $100 per barrel amid fears of supply disruption. Equities turned volatile with sharp drops followed by sudden rebounds, and Bitcoin pulled back as the ceasefire rally began to unwind. But then something changed. Reports began to suggest that diplomacy may not be entirely off the table, and suddenly markets reversed yet again. Asian equities pushed higher while oil slipped back below $100 on renewed hope of negotiation. And this is where things get a bit more interesting. Right now, markets are not pricing outcomes, they are pricing headlines. One moment is escalation and the next de-escalation. And each time, positioning is forced to adjust. This creates a very specific kind of environment. Not a trend, but a loop. Up on optimism, down on risk, up again on hope. It is, in effect, a market chasing its own tail right now. Despite all of this movement, one thing remains consistent. Oil is still the anchor. When tensions escalated, oil surged aggressively above $100 yet again. When markets began to price potential diplomacy, oil pulled back towards the high $90. And that movement is driving everything else, because oil feeds directly into inflation expectations, and inflation expectations drive central bank policy, which drives liquidity in turn. And as we know, liquidity drives the crypto market. Bitcoin over the past 48 hours has been a perfect reflection of this environment. It dropped from nearly $74,000 to around $71,000 as the ceasefire narrative broke down, then stabilized, then bounced. Not because fundamentals have changed at all, but because sentiment is continuously flipping right now, repeatedly over and over again. Analysts are already describing this as a return to the same macro pattern. Oil up, conviction down. Which is not exactly the kind of slogan you would put on a billboard. Equities markets are telling a similar story. Initial reaction sharp declines as geopolitical risk returned, of course, followed by a rebound as hopes for diplomacy resurfaced yet again. The result is a market that looks strong on the surface, but underneath is increasingly uncertain of direction. And this is where the Nasdaq becomes important, because when markets gap higher without a resolved underlying risk, they tend to revisit those levels, not immediately, but eventually. Institutional behavior is also shifting. Just days ago, ETF inflows were strong, capital was moving back into crypto. But now that momentum is slowing again, not reversing dramatically, but pausing, taking a breath, if you will, because institutions do not react to headlines, they react to stability, and at the moment, stability is in a rather short supply. What makes this environment difficult is not the volatility itself, it is the lack of direction. Markets are not trending higher, particularly, they're also not breaking down. They are essentially oscillating and ranging between 2 points, between two competing ideas, if you will. On the one side, we have de-escalation, diplomacy, and risk-on continuation, but on the other, we have blockades, oil shocks, and inflation risk. And neither side has fully taken control, really. We've just been chopping between the two ideas for the past few weeks. From here, everything depends on one variable. Not Bitcoin, not equities, oil, of course. If oil stabilizes or falls, market regains confidence. If oil pushes higher again, then that confidence will disappear. And with it will go liquidity, which crypto massively depends on for upwards movement. Just a few days ago, markets believed they understood the situation. There was a ceasefire, a clear narrative, a direction. Now, that clarity has gone again, and in its place is something far more difficult to price. Uncertainty that changes by the hour. For now, Bitcoin is holding again, oil is fluctuating, and markets are reacting as you would expect. But they're not particularly deciding anything, and until they do, this kind of volatility is unlikely to go anywhere.